of the bill. If you want to be more ambitious, and I think we should be, you could look at taxing a barrel of crude oil. The idea would be to move some of the burden and the costs upstream from America's consumers, from the truck drivers, from the individual passenger vehicle owners and others, and move it upstream. If you put $1 per barrel tax, you would raise approximately $24 billion for $1 on a barrel. Now, remember last year there was one day when the speculators drove up the price of oil $24 in one day. Well, $24, would be perhaps a bit steep to put on a barrel of oil, but $1 or say $5 would virtually pay for the bill. And the prospect is that some of that would come out of the OPEC countries. It would restrain their capability of manipulating and jacking up the price. It could come out of some of the people further downstream. Could come out of the obscene profits of ExxonMobil. It could come out of some of the speculators and others. Yes, some of it would get passed on to the consumers, but since we're talking about a competitive industry here, the provision of fuel to the American people, of course they couldn't pass on all those costs. So there would be some way of sharing the burden there. So $1 per barrel, $5 would raise almost what we need for the bill. And finally, I was inspired flying back to Oregon a couple of weeks ago reading the paper where the paper said, gee, the price of crude oil has doubled this year, demand is flat, and it's all due to speculation. And I started thinking about that, and I thought, well, what if we just taxed speculative trades? The Commodities Future Trading Commission conveniently divides the world between hedgers and speculators. So we would protect hedgers, airlines, trucking companies, steamship lines, railroads, others who are ultimate consumers of fuels. But the financial speculators would pay a very modest fee. If we put a 0.2% tax, 0.2% on crude oil trades and a 0.5% tax on crude oil options, estimates are that that could raise $190 billion over 6 years, which means we could pay for the bill and we could pay for something else, maybe part of health care, or we could reduce the deficit with some of that money, or you could make the tax a little lower and just come out even. Now, there's some who say, oh, my God, the liquidity and the market setting and all the things that happen that they're beneficial because of speculation. You would still have a lot of robust trading among hedgers, and I think some speculators would still trade. Some of them are not just trading on the 0.2% margin, and there would still be a market. But we assume that the price of oil would fall dramatically because a lot of speculators would get out of the market. And we assume that that trading would drop by 60%. That still raises the $190 billion. So, Mr. Chairman, I think there are ways to get to the investments the American people need and want, produce the jobs, help give people hope they're going to get out of traffic, fix our broken system, repair the bridges, invest in our transit systems, and make America, competitive once again and put the joy back in traveling. Thank you, Mr. Chairman.